Mastech is a stock that we are focusing on, and this is on account of the company posting its third quarter results. Stock is down about 1.9% or thereabouts. Revenue was largely flat, but the profit has dipped. Mastech has also recently appointed a new Chief Executive Officer, Umang Nahata, who spoke with us about the company's growth prospects going forward. Listen in to a slice of that conversation.
The quarter that has gone by has been a steady quarter. It's a quarter that is seasonally the weakest quarter for us. It's a quarter where we have a lot of furlough, and we actually had more than expected furlough this time, more than anticipated furlough this time. But in spite of the furlough, we've been able to pull through a steady quarter, which is a good sign as we go forward into Q4 and going forward from there. Similarly, on the margin performance side, I think we've been steady, and our endeavors is to start building up from here.
Right. Umang, can you give us an idea about how markets abroad are looking at the moment, the US market specifically? Because much has been said about Trump's policies and how they can affect the client's decision making going ahead. What kind of conversations are you having at the moment?
Yeah, it's an interesting market right now, although the general outlook looks positive. However, we would call it a little unpredictable right now. But in general, the mood in the economy, especially in the US, seems positive. Healthcare, which is a key vertical for us, although is interesting in parts. So, for example, we do a lot in the provider space, and the provider space seems to be doing well. However, the healthcare payer market is going through a little budget cut and especially challenges on their discretionary spend. So it's a mixed bag from a US point of view. On the other hand, the UK business for us, especially as the government is now stabilizing and their policies are really getting into execution, we see a very strong positive swing in the UK market for us, both in the secured government services as well as the healthcare business that we do. Both are seeing a real strong positive movement.
All right. If you have an order backlog, and from what I can make out at the moment, it stands at around 2,100 crore rupees. And based on this, how much are you expecting to execute over the next few quarters? If you could give us some sort of timelines here.
So we currently have around $250 million worth of order backlog as we close the quarter. Post the close of the quarter, we in the last few days we locked another deal of around $40 million, which pushes up our order backlog by another 8-9%. And this is a 12-month order backlog, so we execute. So that's the 70-80 odd million that we have to execute over the next 12 months. As we go into Q4, we are pretty confident that our order backlog will substantially grow from here. We are looking at a very strong quarter from an order book point of view. So I think we have a pretty decent order backlog that we'll have in our books, although the book and ship and our North America business has to really build up from here. But the general momentum looks for steady growth.
Right. Going ahead, are you expecting that there could be a substantial pickup in the kind of discretionary spends that the clients would potentially look at? Because at the moment, for the past few quarters, and please correct me if I'm wrong, it's more about maintenance, it's more about making sure that the business stays on track. In terms of innovation, how do you look forward?
Yeah, I think the industry in general is on the verge of a huge S-curve, especially with the developments that are happening around AI. I see a lot of seismic shift that is going to happen in the kind of services we do and the kind of solutions that our client have. So while the current or over the last few quarters, the discretionary spend has been steady or low to steady, but I think the adoption is now really starting to pick up. We've already started seeing clients trying out various use cases, and all the providers, all the OEMs, right from Salesforce to Oracle to Microsoft to AWS to Google, all of them, the platforms are much more stable now. The solutions that they can offer are very tangible in terms of the business benefits they drive. So I think the applications will change and will take a serious change in terms of embedding AI into their workflows using the agents that that are going to be available to be built. So a lot of change in the business applications that the clients have will have to go through to make them AI enabled or have AI embedded into it, and which will, especially in the coming year, drive a lot of discrete spend.
Right, and Umang, can you shed some more light in the way we're seeing policies change around healthcare when it comes to these governments, and what sort of a role can Mastech play as we move into the next perhaps 12 months?
So I think, especially, so there are two sides to it. As far as AI is concerned, governments and policies are now, the governments are taking, definitive steps. For example, the UK government, expressed their interest that they are going to spend in AI, but they're also going to build guardrails. From IT services company point of view, I think having these guardrails is a really good thing, because that's when the customers understands what they can and what they cannot do. Today, there's a lot of vagueness in terms of, what's the possibility. There's a lot of fear around the risk of data or data security issues that they might have. As these guardrails get built, it allows our customers to have a definitive range in which they could invest in AI. And then I think once these policies, guardrails get built, the investment in AI will definitely go up. It's similar to what GDPR or HIPAA or did in healthcare or in data security in Europe. Once those got built, your cloud adoptions really picked up. And similarly, as the policies around AI get established, the customers will feel much more open and safe to invest in AI. And I think the technology is there. It's just a matter of them feeling comfortable and safe to go out and really invest.
Right, Umang, let's talk about your operating margins going ahead. Are you expecting to maintain these operating margins, as well as some sort of a view on how the rupee-dollar equation could play out for the company? Of course, we've seen a significant strengthening of the dollar of late, and this perhaps to a certain extent has also played in favor of a lot of companies like yours. But what's the way forward here, and how much of your revenues are completely hedged?
So, no, there are two, three parts of the question. So let me answer them one by one. As far as operating margins are concerned, we're definitely looking forward to improve it from there. We are not happy with the 16.5%. We think we can easily move them to 17 or north of 17 in the coming 2-3 quarters. And we are running all of our endeavors to it. AI-driven efficiency is also a key part of driving that operational margin. And we're already seeing moving our clients from clients who generate more revenue per resource to clients who are generating lower revenue per resource. So we will see some operating levers as far as operational efficiency is concerned. On the currency side, we are dealing Mastech as a company, we're dealing with two risks, or two, I would say, fluctuations of variables. One is the dollar to rupee, and the second is the pound to dollar. Since 50% or more than 50% of our business is in pounds. Both of them are actually quite fluctuating. So we had a strong positive currency movement in Q2. We had a slight dip in Q3. So it's really hard to predict which direction we're going to move. But currently we are taking a safe bet. Almost 60% of our inflows are hedged, and so we are carefully looking at it and making sure as and when we see favorable chances, we keep increasing our hedges.
And a final question on your outlook on top line growth. I'm sure, and I'm probably not going to ask you about this final quarter of this financial year, but as we move into FY26, could you give us some sort of an idea about what we can expect from the top line?
Yeah, I think we are looking at a steady top line growth. Our UK business definitely will end up with a very strong order backlog, and therefore we'll see a healthy top line growth as we get into the next quarter. Our North America business, there's still some more consolidation to do with the assets that we acquired and the integration of those assets. We have also to move to a little more steady managed services kind of revenues in there. So it's a little fluctuating up and down because of the project nature of the business that we have today. But all in all, I think by the time we come closer to H1, we're pretty confident that our North America business would also be ready for delivering the kind of expected high growth rates that we look at. So all in all, I would say early to mid-teens is where we are really expecting this to go.